Adamas Finance Asia is at least the only investment company I'm aware of that focuses on the Asian SME space. That's a small and medium enterprise sector across Asia. We're a pan-Asian investment company. We focus on financing these companies, not owning them or taking equity ownership of them, but financing them. I've said many times before, there's a massive financing gap in Asia, $2.7 trillion US financing gap as identified by the IFC, just in Asia, just for SMEs. So this is a very attractive opportunity, and we're a vehicle set up to address that opportunity. So that's what makes us somewhat unique, if we could use that word. I think the fact that we're listed should be attractive to UK investors, because being listed, you can buy and sell our stock, obviously on the stock exchange. We're AIM quoted. But I think more fundamentally, if you look at the Asian SME space, most companies are private. Therefore, if you're sitting in London or anywhere else in the world, there are probably two ways in which you can get exposure to that very attractive sector where we're seeing very good returns for the investments we're making. One of them is to fly to Asia yourself as an investor, try to find the deals and structure them and diligence them yourself. The other way is to potentially buy our stock as part of your diversified portfolio, which gives you that access as well to the sector through owning our shares. Our board takes our listing in London very seriously. About a year ago, the board decided that actually being quoted and traded in US dollars was actually not optimal. We want to appeal to as wide a range of UK-based investors as possible, and therefore we were redenominated and now trade under the ticker of ADAM, which is the same ticker as always, but we trade in pounds. We're quoted and traded in pounds. Furthermore, we ensured that a number of our trading platforms, or a number of trading platforms in the UK, I think there's over 16 now that were actually officially traded on, that access was also confirmed last year. So we really are trying to appeal to as wide a range of investors as possible in the UK, and those are the two measures that we put in place last year. On the 27th of December, when pretty much everybody was on holiday, we made this announcement, which seemed rather insignificant, but I would say is probably the most material announcement we have made as a company, certainly in 2019. We announced that our quarry, our magnesium dolomite quarry in China, had come into production. More than just producing some product, we actually even disclosed that we'd started selling some product. The reason this was such a monumental announcement, in our opinion, is because we've been saying for some time that we own and control this asset in China. It is in the natural resources space, which understandably made some investors nervous about that exposure in our portfolio. And we consistently said that we want to demonstrate to the market that this is an asset we know that we own, we know what we own, and the best way to demonstrate that was to actually bring it back into production. So we did all of that. We committed to doing that in 2019, so 27th of December was still better late than never. And as I sit here today going into 2020, we really feel like it's a transformational year for that asset as we ramp up production going into the first half of the year. We originally owned this asset through our legacy portfolio that Harmony Capital inherited in managing ADAM from May 2017. We took a very early decision that we wanted to own and control this asset because the asset itself, the ore reserve, as has been valued by SRK, is actually substantive. It's the largest of its kind in the province. I think it's over 113 million tons of reserve. The actual process of extraction is very simple. It really is a quarry. It's a drill and blast operation, or some people may call it open cut extraction. We drill, blast, crush, sort, and sell, and it's as simple as that. There's no sort of metallic or chemical processes on site. We sell the raw ore, and that's it. And we also sell all the aggregate, the lower quality ore, and all the strip from extracting. And that has an equal amount of, if not greater demand now in the construction industry, as we're finding out, are not constructions for homes and buildings, but for infrastructure. There are still large infrastructure projects in the province in China, in Jiangxi province, which have been mandated by the Chinese government. And construction companies are short of aggregates to put into things like road paving, concrete for bridges, etc. So we're finding, and we found, that there's going to be a lot of demand for this product once our operation was up and running. And that's why we made the decision to go into production as we have and announced in December. It's a common misconception, I believe, particularly in the outside world, that China doesn't care about environmental issues. But I would say that our experience over the last 2 years on the ground is exactly the opposite, which is that the Chinese government does take environmental regulation very, very seriously. In fact, the province in which we operate is also got the highest number of magnesium smelters, which is a very pollutive industry. And as a consequence, the Chinese government, the Environmental Protection Agency equivalent in China, deemed it necessary to clamp down very hard on polluting industries in the region in which we operate, which meant that a number of mines and smelters actually shut down and have not been able to reopen. We are the only quarry that I'm aware of which had our license reapproved about 2 years ago, which we announced to the market. And that was also part of a process of showing the government that we're committed to dealing with environmental regulations, ensuring that there's a control over pollution and particulates from our blast process, for example, entering the atmosphere. All of those things we've been working on in the last couple of years, and that has brought us to the point now where we have, as I said, gone into production. And the environmental regulations have actually helped us because it has made us more, if you will, more unique in the region, because our competition can't keep up with the requirements from the government in terms of capital spending and so on. So it's actually been a very positive outcome and generally a good thing for us because we want to participate in a way that's responsible and environmentally responsible with whatever we do in our portfolio. Back in September 2019, we, for the very first time, disclosed to the market our production metrics or our expectations around production metrics, production capacity, sales prices from a market study that we had commissioned to give the market, I guess, a first glimpse of what this asset would look like when it was in full production. As a consequence of now going into production, the next sort of disclosures that we would expect to make, particularly in the first half of 2020, are not only ongoing production updates, but also perhaps guidance in terms of what we expect actual production to be in 2020, bearing in mind that it is a ramp-up year. I think that will hopefully help the market better understand the upside that's potentially embedded in this investment, because it being productive is great, but now we need to tell the market, okay, how do we actually translate that into potentially free cash flow for our portfolio in terms of valuation of the asset? Were we to dispose of it down the track, etc.? So I think that's the next stage of disclosures that we are preparing to make, as I said, over the course of the first half of 2020. There's never a dull day at Adamas Finance Asia. Obviously, we have a number of investments outside of our quarrying operation, albeit that's the biggest investment in our portfolio. There's been a lot of things going on in the background. We've announced new transactions, for example, and new investments in Niseko in Japan at the back end of 2019. Our investment in Fook Lam Moon, which is a restaurant business in Hong Kong, has garnered some attention given what has been going on the ground in Hong Kong. I'm pleased to say that we're very comfortable with our investment in Fook Lam Moon because it is a brand. It's a 70-year-old business, as we've disclosed in the past, notwithstanding the dip in consumption in Hong Kong, which is empirically evident as a result of the troubles in 2019. We feel confident that this business is a very resilient business and will survive this period. So, as I said, there's a lot of excitement every day in the investments we have, as well as obviously the pipeline of investments that we continue to assess for their appropriateness for our portfolio going forward. We've always maintained the view that being a Pan-Asian vehicle by definition means that we need to have exposure across the region and across industries because we're a sector agnostic Pan-Asian investment company. As a consequence, my team and I are constantly assessing opportunities in a wide range of industries. In our pipeline currently, we are probably at any given moment in time assessing somewhere between 5 to 10 investment opportunities that can range in size from $2 million to $5 million each across a number of countries, including the Southeast Asian region, Australia, Japan, where we've been active, North Asia. We're looking at a few opportunities in countries like India at the moment, and all with a view to continue to diversify our portfolio to reduce but not eliminate our exposure to China, because again, being Pan-Asian, we must have exposure and want to have exposure to China as well as I said, countries like Indonesia. So the work goes on in the background. Most people don't see it until we announce a new investment, but we have a very rich pipeline of opportunities that we continue to assess. We take a very bottom-up approach to investing, and therefore macro factors, while relevant and important, are not the driving factor in terms of us selecting investments for our portfolio. Really, we are very much driven by the minutiae of understanding how a company works, its position within an industry, the competence or lack thereof of management, the backing of shareholders and things like that, that we do spend a lot of time in our due diligence process on. That being said, macro factors, and particularly announcements recently, for example, of the first phase trade pact, if I can call it that, all those things that help improve sentiment generally are obviously positive for any business, let alone ours, that is seeking pan-Asian exposure. As an example, perhaps if we look at somewhere like Hong Kong, where there has been a lot of negative sentiment, but that has then translated into actual reduction in consumption. There is a potential, not potential, there is actually a recession underway at the moment in Hong Kong. I mean, all of those things, while they don't necessarily affect our underlying portfolio or particularly investments, it's always better to invest in an inflationary environment than in a recessionary environment. So macro factors do have a bearing on our portfolio, but not to the extent that it determines which investments or which sectors we necessarily want to focus on. Well, as anybody that knows me, and particularly my team knows, I want everything done yesterday. So when I'm asked questions about progress and whether I'm happy, I'm never happy, because we can always do better than what we have done today. But on a more serious note, I think myself and my team, and I hope my board, are very pleased with the progress we've made over the last 2.5 years, because we've been focused almost exclusively on managing our legacy portfolio, eliminating exposures we didn't want, restructuring ones that we did, and therefore we have now built a platform which is also starting to diversify, generate income, and position itself really to continue to grow. So where we are today in terms of our plans is that we have, as I said, managed our legacy portfolio and our exposure to China down dramatically. In terms of our net asset value and our last published numbers, and in fact some research even from Equity Development suggests that our net asset value per share is around 70 pence per share. Our current market cap is around 35 pence per share, so there's a massive disconnect there between net asset value and our share price. So there's a huge opportunity for investment for investors. And I think the other interesting thing that's on the horizon, which again the board has alluded to many times, not even alluded to, but explicitly stated, is that they have an intention for Adam to become an income-paying or dividend-paying company. And as our portfolio continues to generate income, that becomes more and more of a reality. And I would hope that in the near term, there would be an announcement on a dividend policy, for example. So we really feel very positive about the progress we've made and the prospects for 2020 for the business. When we made the decision, or the board made the decision to issue the corporate bond, it was really based on the idea of trying to raise some money, but to do so on a non-dilutive basis, bearing in mind that when we raised the bond was the fourth quarter of 2019, when equity markets in the UK and particularly the AIM market was not faring very well, leading into the Brexit uncertainty or the election uncertainty. And we were not one of these AIM companies that needed to raise money to keep the lights on or to operate our business. We had plenty of cash. So the bond really was an opportunistic endeavor in order to try and garner some relationships, to have investors who like what we do, but we didn't want to give our equity away too cheaply, so we came up with the idea of a corporate bond. The coupon is high, 12.5%, but we have a limit of a total of $10 million is the maximum limit of how much we can issue in that bond program. We've only issued, I think, about 2 million of that. So the actual negative carry on our portfolio is minuscule. It's 12.5% and 2 million on a almost $100 million portfolio at the moment. So the financing cost isn't really something we're concerned about. In the future, in terms of raising money and raising capital to fund our pipeline, we believe the bond program is one way to do it. But our hope is that as things progress on our front, but as the market also continues to improve beyond the 31st of January 2020, that we will also, as an investment company, or at least the board, would start considering the equity capital markets as a viable means for financing our pipeline, should market conditions provide that. I am very excited about the future of Adamas Finance Asia. And I can say that with a lot of confidence because I've been responsible for, along with my team, the last 2.5 years of very, very hard work with the support of an excellent board in transforming the portfolio. So we really do feel now that we have a platform on which to base our growth expectations or our growth plans. There are a lot of businesses that want to grow and become bigger, but they don't have the right platform to do so. We, on the other hand, wholeheartedly believe that we do have that. And with some of the uncertainty in the market, which we can't control, now seemingly dissipating, we're very, very excited about the prospects for 2020 for our business.